IMPS versus UPI. The future of digital payments in India. In the fast-evolving world of digital payments, one question keeps resurfacing. Can a legacy system like IMPS survive the UPI revolution, or is it destined to fade into obscurity? The answer, as it turns out, is far from straightforward. Let's unpack why this debate matters, and why it might just split the room. Picture this: two payment systems, both born in India but with wildly different DNA. IMPS, the older sibling, has been around since 2010, offering real-time fund transfers through mobile numbers or IFSC codes. UPI, the tech-savvy upstart, launched in 2016 and now dominates the market with its seamless QR code scans, peer-to-peer transactions, and app-based ecosystem. The numbers tell a story. UPI processes over 18 billion transactions annually, while IMPS lags behind with just 500 million. That's a 36-to-1 gap. But here's where it gets controversial. Does this gap signal IMPS's obsolescence, or is there still a niche where it thrives? Banks, the gatekeepers of both systems, face a tough choice. UPI's meteoric rise has made it the default for everyday transactions, from buying coffee to splitting bills. IMPS, meanwhile, still holds value for bulk transfers in scenarios where instant processing is critical. Yet, maintaining two parallel systems costs time and money. Should banks double down on UPI's success or risk alienating users who rely on IMPS for specific needs? And this is the part most people miss. UPI's dominance isn't just about numbers. It's about user experience. UPI apps like PhonePe, Google Pay, and Paytm have turned payments into a game of convenience, with features like one-click transactions and zero fees. IMPS, by contrast, often requires users to juggle multiple apps or bank portals. But does that mean IMPS is doomed? Not necessarily. For businesses needing to process high-value, time-sensitive payments, like salary disbursements or vendor settlements, IMPS remains a reliable workhorse. So where does this leave us? The truth is, both systems have their place, but the future is leaning heavily toward UPI. The real question is, can IMPS evolve to coexist, or will it become a relic of the past? What's your take? Is it time to let IMPS retire gracefully, or does it still have a role to play in India's digital economy? Share your thoughts in the comments below. Let's spark a conversation about the future of payments in a world where convenience rules. PhonePe's dominance in India's UPI market. 47.2% share explained. In a stunning shift, PhonePe has surged ahead to dominate India's digital payment sector, capturing an impressive 47.2% share of all UPI transactions as of June 2025. This fintech giant processed a whopping 8.54 billion transactions in that month alone, valued at 11.98 Indian rupees lakh crore. But here's where it gets controversial. Some argue this level of market concentration between PhonePe and Google Pay, which together account for over 80% of UPI transactions, could stifle competition. PhonePe's ascent has been fueled by an intuitive user experience, innovative in-app services like bill payment and investments, aggressive merchant onboarding, and foray into underserved rural areas. Cashback and rewards further drive user loyalty, with 90% of Indian merchants now accepting PhonePe. From Kirana stores to e-commerce platforms, the platform has become ubiquitous. But is this dominance healthy for India's fintech ecosystem? And will new players like Navi and Super.Money manage to capture market share? The debate rages on.